Something happened with my investments last month that up until recently I didn't think was even possible. The money my portfolio made completely on its own was more than the entire monthly salary I used to bring home from my well-paying corporate job. It's a mind-blowing moment when you realise your money is earning more than your 40+ hour weekly sacrifice, and it proves that passive income actually works. So in this video, we're going to break down exactly how that happened. I'll show you the actual numbers behind my portfolio and how it grew by almost £3,000 in 1 month, completely passively. You'll see the exact funds I hold, and I'll explain the simple strategy that underpins all of this growth. By the end, you'll have a clear picture on how you could build your own financial security using the stock market. Just before we get started, nothing here is financial advice. I'm sharing my own journey, but your financial decisions are your own, so please research the options thoroughly. Firstly, I want to address how my portfolio grew by more than my old monthly salary. Let's start with the hard figures. At the start of last month, on the 5th of September, my total portfolio was sitting at £76,153. As of today, the 2nd of October, that number is now £78,895. That's a growth of £2,742 in less than 30 days. Compared to my take-home pay from my last full-time job, which was about £2,500 a month on a 40k annual salary. I also want to point out that the growth happened without me contributing anything new. This was purely the money I'd already invested doing its job. And if you've ever wondered if passive income is real, then I think this is it. This is about achieving big results with an easy-to-follow long-term plan that is fundamentally safe. This notion of the stock market being safe may sound a bit weird to you, and I have to say, it took a long time for it to sink in for me as well. But having been doing this for 4 years and tracking the progress, I honestly believe I can back up that claim as long as you follow the 2 fundamental rules, which I'll share a bit later in this video. Now, it's so important for me to be clear that not all months look like this month. That's because the stock market is volatile. It goes down as well as up, and there have been months where my portfolio has gone down in value despite the overarching trend being positive. So just know it's not going to be a straight line if you start investing today. In fact, I'm preparing an in-depth video tracking my portfolio's performance right from the very beginning, showing all the highs and the lows and everything in between, so you can see what the journey really looks like. But coming back to this month, when I updated my tracker and saw that number, it honestly stopped me in my tracks. It just felt insane to me because I remember working so hard for that money every single month. The commutes, the deadlines, the stress, it was really hard. And on a personal note, I didn't find the work to be very fulfilling. So to see that money I'd put into the stock market outperforming my salary, well, it made me feel very good about starting this journey 4 years ago. And what also makes this comparison really good is the vast majority of this growth is highly tax efficient. Around 72% of my entire portfolio is held in ISAs, meaning the growth on that portion is guaranteed to be completely tax-free. That makes it directly comparable to my after-tax take-home salary I used to bring home. So where is this money invested? Let's go through it account by account. First up is my oldest and biggest pot, my Vanguard Stocks and Shares ISA. This has grown to £26,425. As you can see, this is split across a few different funds, like the Life Strategy 60% Equity Fund and an ESG Screened Global Fund. This is the account I started my journey with, and honestly, it's a bit messy, with more funds than I necessarily need, which is something I'll be fixing soon. But nevertheless, it gained £625 in the last month. Next is my trading 212 Stocks and Shares ISA. I invested a big £20,000 lump sum into this account back in July. Well, that pot has grown to £21,980. That's a return of almost £2,000 in just 3 months on that one decision alone, and the change this month is up by £812. Then we have my Doddle Lifetime ISA or LISA. This is invested in there on top of the World Fund, which is just a simple global tracker of the HSBC FTSE All World Index Fund. It's also been their best-selling fund for 2 years in a row, which I'm really not surprised about because it's a really great fund. That's now sitting at £8,367 for a monthly gain of £580. You should know that LISA have restrictions. That means you can only use one for your first home or for retirement. Otherwise there's a penalty, but on the flip side, what you put in gets topped up by the government, so that can be worth the limitations. And I also have a small account with Invest Engine, which is at £141. It might be small compared to the others, but I think it's important to show because every portfolio, including mine, starts small. This month it returned me £5. And finally, the part of your portfolio most people completely forget about: old workplace pensions. I have 2 of these from previous jobs that I no longer pay into. My Nest pension has grown to £11,705, so up by £414, and my legal and general pension is now at £10,277, having returned £306. The combined monthly growth for these is £720, and honestly, just keeping track of these is so important. No one cares more about your money than you do, and the single biggest pension mistake is simply doing nothing and letting them get lost. Okay, seeing all those different accounts and funds, you might be thinking it looks complicated, but the truth is the strategy behind all of this growth is incredibly simple. And if I were to start again, it'd be way easier to do because it all boils down to just 2 basic rules. Rule number 1, make it simple and global. In my early days, I made the classic mistake of thinking more funds meant more diversification, that I was in some way spreading the risk, but holding 3 different global funds, or even say a combo of the S&P 500 and an all-world fund, is a bit like mixing Quality Street and Roses together. Yes, they're in different packaging, but you're still just investing in the same companies and you're not really adding anything new. The real reason behind my portfolio's growth is simply buying the entire world. Instead of trying to pick winning stocks or countries, I just look to buy into a low-cost global index fund or ETF. This means I own a tiny piece of thousands of the world's biggest companies, from Apple in the US to Samsung in South Korea. It's the opposite of gambling. It's a long-term plan based on the fact that over time the economy grows, and it's as close to a guaranteed return that outpaces inflation as you're ever going to get. Rule number 2, time, not timing. The second rule is even more important than the first. This portfolio wasn't built overnight, and the only reason it's at nearly £80,000 today is because I started building years ago. My very first investment back in 2021 was an accidental £10 that made me 10p. It felt tiny and pointless at the time, but the important thing is that I started. Most of this portfolio has been built up since then, which just goes to show that it doesn't take forever to gain real traction if you're committed to it. And that means sacrificing what you can spend now in favour of what it can make you later in life. And it's so important to have that long-term view. The £2,742 my portfolio grew by is what's known as an unrealised gain. It's growth on paper, but that money only becomes real if I sell my investments, which I have no plans to do for years, if not decades. Investing is a long game, and you have to be comfortable riding the ups and the downs without panicking. That fear of, is now the right time to invest, can keep you on the sidelines forever. But as I like to say, the best time to invest was yesterday, and the next best time is today. That long-term view is also what keeps me motivated. Knowing I have decades of this ahead of me to compound and grow is what's truly exciting. I can't wait to see where this pot ends up. So when I look at that 78,895 number, my big takeaway isn't about the money, it's that a simple, clear plan is everything. It removes the fear and lets you act with confidence, proving that you don't need to be a financial genius or wealthy person earning huge sums of money to build real wealth. It's about starting, even if it's small, and then letting your money do the work for you over years and years. Now you've seen the before picture of my slightly messy portfolio, you may want to see my exact plan for consolidating everything into one master platform, which is covered in this video right here. This is the end of the video, so click the screen if you want to watch that next.